All right, looks like we're all set. Let me know once you can hear me good and everything, and you got a clear picture, but everything looks good on my end. All right, welcome back to the channel. Crypto Trend Trader with a quick update on the markets for our Sunday evening stream. Welcome back to the channel. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Today we're going to be taking a look at quite a few assets here. I've got a bunch on the list. Gonna get started with our typical 10-year DXY. I've got the SPY, NASDAQ, Dow Jones, gold and silver, Tesla, NEO, Bitcoin, obviously, Ethereum. I want to take a look at Zoom, PayPal, Alibaba, Apple, and Aurora Cannabis, Caterpillar, and the energy index, XLE. So yeah, let's just get started here with the 10-year. Obviously, this is the talk of the town. We were talking about it before it was popular to talk about it, as we recognize the bottoming pattern taking place ahead of time. But more importantly, we have broken out of the channel back to the upside now. We've gotten our measured move, and exactly what we were talking about happened. We broke out, came back down, retested the 618 level, came back up, retested the high, slightly took it out by a wick, came back down, put in another higher low, and then here we gapped up and actually closed last week, at a new high. So we're up here. We came all the way up to 1.64, where we closed at, and essentially at this point in time, I mean, there's nothing on the charts telling us that we're not just going to continue moving to the upside. So at this point in time, that's exactly what I'm expecting. I don't see any reason why we wouldn't continue to move to the upside. Unless the Fed steps in and starts making changes or doing something differently. At this point in time, we're higher than the dividend yield on the S&P. So, this is basically going to be like the risk off trade, at least temporarily until something changes. So, and you'll notice that each time previously, when we would get that hard buy, we get a nice move afterwards, small correction, hard buy, nice move afterwards, small correction. And now here we are once again getting the hard buy. We have still everything in our favor for continuation to the upside. So let's skip over here real quick and we'll take a look at the dollar. Again, traveling in this channel, heading down, finally got the break of the channel. We're halfway on our measured move. We came up to exactly what we're talking about, basically front running the 200 exponential and simple, but we put in a low. We put in another low. So, what's most likely going to happen here? We consolidate in this range and continue to the upside, or potentially, go sideways or come back down and just put in a third in this series of lows. And as you'll notice here, we already have basically 3 highs here as well. So once again, depending how you draw this, exactly what you're looking at, we basically have something to this level here where we are just operating inside of this channel or this pattern here, where we would expect, a touch of the top, come back down, potentially all the way to the bottom, then back to the top. But, we could easily find support in like that mid-range here and then break out to the upside and get continued move. 1.9 trillion, a lot of money, but now you see like European central banks coming out saying they're going to do a ton more stimulus. Everybody's doing stimulus. It's basically just a race, like a bunch of monopoly games going on at once, and everybody is issuing more banknotes. And it's not about like if people are issuing banknotes, it's about everybody with a printing press printing to see who proportionately devalues their money faster. And since we're like dollar is, the index is essentially in relation to the euro with like a small other basket of currencies that are less like notable or less important, that's the most important thing we're paying attention to. Hey, what's up, brother? Welcome. Good to see you. So yeah, that's basically, I just wanted to knock those two out to get started with. And then, we will, let's see, let's start off with crypto this time, and then we can kind of move around from there. So Obviously over the weekend, we were talking about specifically how the futures, Bitcoin futures, had already broken the all-time high on Friday and then actually closed like a bearish engulfing candle. So, essentially over the weekend when the market's partially closed and there's less people involved in it, you would expect what always happens every single weekend, almost without fail, they would get a bullish move. And of course we did, broke out to a new all-time high, got that push up to the exact level that we've been talking about, probably the most or one of the most important levels, in crypto or really in any market. Let me switch to a different time frame and kind of clean this up a little bit. I've got this dragged out so far, it's like useless. All right, so what we see here in green now is what I'm paying attention to, and that is from our previous market cycle top at 20,000 to our previous market cycle bottom at just over 3,000. And now when we broke out over that top at 20,000, the next targets are obviously going to be those key fib extension levels. So we didn't see too much on the way up at the 1.236, broke through that no problem, got straight up to the 1.382, found resistance, came back down and retested the 1.236 as support. Absolutely beautiful. Got the retest, held support at 30,000, got continuation. Again, came through the 1.5, no problem. Came up to the 1.618 and fell just slightly short of the 1.618, at which point in time we fell slightly short of that, came back down, and this time we found support at the 1.5, broke down from it, and then got our push back up. So now here, if we just zoom in a little bit, you'll see we finally got the perfect move up and tagged the 1.618, just over $60,000. That's what we've been expecting. That's what we were expecting. And, obviously played out perfectly. Algorithms do not like when things like this happen. When you move all the way up that close to fulfilling an algorithm and you don't, often they will sell off and then just push the price back up. I call it marching the price back up. And a lot of times what you'll see with like a price being marched up, you'll see like a series of candles like this where it's just one after another in like a series, and it's very clear that something is just pushing the price. Something is just very clearly moving the price back up. It's often going to be like all buys or all sells depending on what direction they're marching in. It's almost always an algorithm getting fulfilled. So and you'll see here, obviously we are in the bullish control zone on the daily. We have our histogram over top of the slope. It is blue. All our moving averages are in the correct direction. So on the daily, everything is looking good for continuation. This red candle that just came in has me a little hesitant. Do not like to see an all-time high followed by an over 50% of the candle sell-off right afterwards. That's often what happens with the topping pattern. Also like to see a wick at the bottom of this as it sells off and then people buy it up, especially at the end like of a weekly close, because now that's leaving us with a weekly close on the CME, which is a bearish engulfing candle, and then obviously the weekly close on Bitcoin is not bearish engulfing candle by any means, but a pretty massive sell-off with no buying action coming in until afterwards. So what we're really paying attention to right now, what's extremely important in this market is, does this candle come back up and find resistance at the same level, or do we take out that all-time high and get continuation? Because if we don't, if this starts to sell back off and then we end up with a red candle, it's going to look like at least a temporary top coming back in. But again, we're not looking to get bearish in these markets until we have a specific reason to. But what we are doing is paying close attention to what's going on. We specifically spoke about this weekly, situation going on here. We have a sell at the top of a range, but never leave the bullish control zone. And then we get a buy, blue and purple Stoch cross at the top of the range. That a lot of times, inverse to what we were talking about with Tesla, when you get a buy at the top of the range like that, a lot of times that will be the market top right here. So we're paying attention to that, paying attention to, do we get any divergence coming in? But the truth is, when you get a cross to the upside at 87, like how much further can you really run? Because this thing maxes out at 100, you never really get to 100. So, there's not a lot of gas left in the tank to get continuation to the upside here. I'd much rather see this thing come down sideways and just kind of consolidate, stay inside the bullish control zone, and then we can actually get like some continuation here. But overall, again, Not going to get overly bullish or bearish rather ahead of time. This looks fine. The weekly looks fine over here. I was talking about the weekly close, and I meant the daily close on the bearish close. But yeah, weekly looks fine. Everything looks good overall. If we go down to a shorter time frame, we get a better idea as to exactly what was going on here. On the 4 hour, we had that sell-off coming into like yesterday into the end. All that is us closing the gap like we always do. We basically closed like CMEs at like 57,000, just over, maybe like 57.2. Then we got like this vicious move up, or this burst up. And then essentially all we did was we came back down. CMEs opened and then just pushed right up. But we just came down to basically fill that gap. We didn't get all the way down to like 57 and some change. But, essentially we got close enough that, there's agreement on the price between markets. So, and that's what you want to see. You want to see the price come back down. You want to see it come back and retest that previous high as support. And then in this case, it got slightly front run. But, that's that Sunday trade we always talk about. Saturday night, Sunday morning trade. Every single time you see the same exact thing happens. 90% of the time at least. Whatever happens over the weekend, the inverse will happen on Saturday night or Sunday to bring the markets back into line. And then you can get the actual continuation in that direction or reversal. But it almost always happens. It's probably the easiest trade you can ever make, when you have two markets, one that's 24 hours and one that closes. So. All right, so yeah, Bitcoin, overall, still looking good. All-time high. We're getting a hard sell. We're still in the bullish control zone, but do we want to pay attention to, I think technically we've left the bullish control zone here, but until this 4 hour closes, there's no reason to assume that it's going to print like that. We could easily like push back up like we're doing right now. This is a nice bullish engulfing candle off of the 21, off of our parabolic SAR stop and reverse. So essentially we're just bouncing like a key support level, which is exactly what we would expect to happen in a bull market. We've obviously this entire channel up here that we've been operating inside of, basically since we crossed back over to the positive on March 6th. We basically bounced to 21 every time we've come down close to it or touched it. So, again, we expect that to continue happening until we don't. And then once we break through that, or if we break through that, then we'll expect something like a 55,800, retracement somewhere down to like the 50 or 55. So, but as for now, looks fine. The previous time when we got this hard sell, we did come down a decent amount, but nothing too crazy. From the top to the bottom of that last one, it was like a 5% pullback. We basically already got that coming in here. So, from the top to the bottom down here, we got like a 5% pullback. Could we sell off another 5% and come down here? That would put us right at our 50, 55. So, it's not unrealistic to think that's going to happen. But, the key line that we're paying attention to right now, is this super simple one right here. We have this white trend line that we came down to the bottom right here at 43,000, bounced it right here, and now we're like, pushing away from it like powerfully. So there's no reason to think we're not just going to keep finding support on that. Obviously, like once we don't find support on it, then we can pay attention to, what else might be potentially happening. But as far as I'm concerned for right now, looks good. Probably going to continue looking good. Now that we have this white trend line though in action, we can essentially do what we always do and pick like the last point that we touch that trend line. So here we have 1 point, 2 point, 3 point, and then we've been slowly diverging away from it. And then we can essentially start looking at what our potential like next trend line or next support area is going to be. So you can kind of see here how I'm getting this one right here. Let's switch the color on that. So we can zoom in a little bit and you'll see I went from the wick right here to the wick right here. And then we came up to the wick right here. And now here, that's the wick right here. So now we have the 21. We have this parabolic trend line in blue right here. We have the parabolic stop and reverse point right there. That's like a triple support right there, which is exactly where we closed at or touched down to. So again, we expect this blue line to hold until we don't. Once it breaks, we potentially would get that breakdown to the 50-55. But essentially what we're looking for is a breakdown from it, come back up, and then it tests it as resistance. If it acts as resistance, then we can get our move back down and then potentially come back down to the white. But as far as I'm concerned right now, looks like continuation to the upside. Especially if we close this next 4 hour on top of the 8 here, it's basically just going to look like we save price action, which just about every time we've sold off below it, we got a bullish engulfing candle right off, sold, almost got a bullish engulfing candle here, continuation, sold off, big green candle, continuation, sold off, bullish engulfing candle, continuation, sold off, bullish engulfing candle, sold off, bullish engulfing candle. So every time we're getting the same thing happening. This is clearly bots, and algos just stepping in and buying it up. So, there's no reason to be bearish in these markets whatsoever, again, until the markets start telling us otherwise. Now, one thing we're paying attention to on the 4 hour here is, we basically had the slope flip over back here in blue. We were above the slope line back here at the bottom. So here we got our hard buy signal. We flipped the histogram over the slope. Here we flipped the slope over blue. So essentially from, depending where you're looking at, but from this bottom area back here, we've been bullish and in a long trending trade. Now, what do you pay attention to? How do these, trends tend to end? Well, obviously this parabolic parabola crosses below the slope line and then eventually flips it over red. Now, in this case, we continued to the upside as it was kind of like looking sketchy here and then finally got a violent dump. But now what we're looking at right here is we are actually just at it right now, which typically what will happen is when we're below it, this will come down and bounce off of it in the same way, come down and bounce potentially. Or if we break down from this and spend enough time under it, we will drag the slope line, flip it over red, and start selling off. So we could be very close with this hard sell, leaving the bullish control zone, break down from this key support right here, break down from like the parabola from the slope line. So we could be very close to getting another retracement. Again, we've had a nice little like trending up move right here, a new all-time high. But again, no reason to think that we're going to sell off violently or anything. At most, from where we're at right now, I would be expecting like 7-8% sell off. So nothing crazy. But overall, Bitcoin looks good. Looks good for continuation. And just so we can kind of get a next target in mind too, let's switch over to the daily. And again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. 1.618 of this little top that we put in at 58,000 to our little bottom that we put in back here at 43,000. The 1.618 of that move is 70,725. So, that's another like 15% move up right there potentially. So that is what we're paying attention to. That is our next target on the daily for like this Fibonacci extension level. And if you pay attention to the previous fib pullback, previous high pullback, I should say, we basically had, can't actually see. I think I accidentally dragged that up there. So we basically have our previous pullback, which was, I don't know what that one is. Just going to put a fresh one in here. So if we go from our top that we previously had at 42,000 down to the bottom we previously had at like 29,000 roughly, that will give us our 1.618 target, which we slightly overshot right there and then pushed up higher, but we didn't quite make it up to like the 2.618. So we're looking at roughly like a 1.786 move up here, a little higher. So if we got the same move on this one, that would put us in line with the 2.618. So that would be about like 77,000. So any of these levels right here, somewhere in between basically 71,000 and 77,000 is going to be our next target for the upside. But again, the most important thing we're paying attention to is, do we take out that previous all-time high from a couple of days ago, or does this chart showing some weakness and potentially selling off? So but that's it for Bitcoin for today. We'll look at a couple other cryptos and then we'll move on to some of our traditional assets. This is our like Sunday evening. So we'll have all our markets opening up like futures and then obviously tomorrow morning. So here we got Ethereum. Ethereum is showing weakness. Failed to take out that previous all-time high, consolidation, but still 8 above the 21. Still looking decent. But it is an internal retracement still. So until we take out at least like that close at 1964, Ethereum looks weak. Nothing much else to say about it, honestly. Most cryptos have done the exact same thing. Very few took out the previous high right there. Basic attention token is one that I'm paying attention to. Obviously I'm bullish on this thing fundamentally because it's actually useful, which is more than you can say about most cryptos. So, that's definitely like a plus. Any cryptos that are useful, like Ethereum or basic attention token or Binance coin, or obviously like Bitcoin, like those are the ones that fundamentally look the best to me, because they're actually like functionally useful, as opposed to like the pipe dream cryptos. So here you have the opposite situation happening. Came in, put in a high, did our retracement, took out the all-time high, put in a small retracement, took out the all-time high again. So this thing is like looking more bullish. You have other ones that are doing the same thing, taking out their all-time highs. But cyclically right now, from that previous top and then continuation, BAT looks very good. So I'm definitely paying attention to that one. So let's transition into some of our other assets. We'll take a look at Tesla next. Paying attention to Tesla here. Exactly what we said happened. Got the bottom out at the 200. Came back up. We are now getting, just like we said, we got rejected at the 21, but we're above the 8. So we're above the 89, below the 55, right in between basically two key moving averages on the bottom and two key moving averages on the top. So when we break, whatever direction we break in, it's going to be a violent break. So that's what we're paying attention to. Still an internal retracement, but it was like 40% pullback. So, what are we expecting right here? We get a nice move. We get a nice pullback back up to the top right here, or we could get continuation, lower, depending on what happens. Overall, tech is not looking the best right now as the market is starting to broaden out. Typically, though, at the top of a bubble, everything consolidates into fewer and fewer assets. So the fact that we're like broadening out looks good overall. Although, I think a lot of it is like ambitiousness. People are trying to buy like undervalued things as they're assuming that like some stuff has already run a little too high. So they're getting bearish on the stuff that's already had its big moves. And now they're trying to buy up the stuff that's, less popular, or, maybe like the quote unquote reopening trade, etc. So that's what we're paying attention to. From the bottom to our top right here, we got a 50% move of the pullback. So if we sold off from 900 down to like 540, we moved back up 50% of the way. So now we want to pay attention. We obviously came back down to the 382 right away. We want to pay attention to, do we come back down to the 236 in orange right here at 611 and then find support and keep moving up? And we're starting to form an uptrend inside of our downtrend. So we have a bearish move, but we have a bullish retracement of that bearish move. Or are we going to come back down here and take out the low and move back down inside the green box, closer to like the 618 retracement, the 200 exponential, or simple moving averages? But again, I would expect this to get front run on the first push down here. If you want to be conservative on this one, or if I was being conservative, I would wait for the 821 to cross back to the upside, at which point in time, you could basically get a little more bullish on this asset and assume we're going to get continuation. We do still have a pretty sizable gap back here at $408. Do I think we're coming down to close that gap? Not really. Is it possible? Of course. The largest retracement I would even possibly expect is back down to like $250. The smallest retracement I would expect is already taken place. So, it could honestly, in my opinion, go either way on this one. But overall, Tesla looks good. In a long-term uptrend, still above the 200 moving average, still sloped to the upside. Fundamentally still strong, but probably overvalued, definitely in some form of bubble. Let's go over to NEO now. And this is like NEO Inc., not like NEO Crypto. So similar situation. NEO basically got a massive move up here. It's been in a clear bull trend, uptrend for some time now. But we did sell off from that all-time high at $66 down to $31. Obviously a massive, massive move down. You can look at that. But, I mean, this is what you're looking for when something's overvalued is, a big pullback like that. 52%. You could say some things about China as the stock market in general. Chinese stuff is not doing as well. And we're going to actually look at a couple other Chinese stocks as well. But to tell you the truth, this thing looks decent. Overall, I don't think this is, this is a this is a value play right here. You're assuming that this thing's going to keep going up. Like overall, found support at our 200 exponential moving average, just slightly above the 200 simple moving average. But there's a reason this thing is moving. It has strong fundamentals and definitely potential for growth, like long term. So what do you want when something gets overvalued? You want a violent pullback, and then you want to find like solid support and see some continuation. Yeah, I'll check that out in a minute. So obviously it came back up once again to the 0.5, same exact thing as Tesla did, sold off, got back 50% of the sell-off, and then now we're above the 8, but below the 21. So we want to see right here again, if we want to be conservative, wait for this to cross back to the upside and then continuation. We could easily see like a slight fake out situation like this, but what we're paying attention to is if we do sell back off, or when we do get a sell off, do we put in another higher low and then continuation. One notable thing about this is we did enter the bearish control zone, but we did get the hard buy signal. Last time that happened, enter the bearish control zone, got the hard buy signal. What was our next move after that hard buy signal came in? 2,687%. So pretty good, pretty solid move, I would say, from $2.41 all the way up to $67. That's basically like a life-changing move right there. So is it going to happen again? Maybe not. But, that was the last time we saw this signature on the daily, and we're bouncing a key level, 200 exponential. That was obviously this thing going from in a long trending daily bear market into a bull market. As you can see, naturally, if you've watched the channel for any amount of time, you know that when I get bullish is once we start consolidating above the 200 exponential and simple. But you'll see here we moved above it and then we sold back off pretty violently. I wait until the slope on both of the 200 exponential and simple moving averages switches back to the upside. So here you'll see the 200 exponential started switching back to the upside, and you could have got faked out right here and then took a massive hit to the face, another 50% drawdown. Or if you waited till the 200 simple in dark blue right here, that thing didn't flip over till right here. When it flipped over, price action was at like $3.57, but you have the exponential blue, you have the simple blue, both slopes to the upside, price action above the slope, and then that's when we got the massive bull market move. So again, imagine the bearish scenario right here, and this does just come back up to the 0.5 or 618 or 786 and then fails and starts selling back off here. We want to pay attention to, do these things lose their slope? So we're still bullish in this asset, even if price action is below it, although I'm not necessarily looking to try to buy the bottom, but we're still bearish or bullish in this asset until both these flip back flat and then start to come back to the downside and price action is below them. So, essentially that would signal to me that not only price action wise we're in a bear market, but that this asset is in a long trending trade to the downside. In the meantime, though, what I'm looking for is when we're in a long trending trade to the upside, I'm looking for plays to the upside. When we're in a long trending trade to the downside, I'm looking for plays to the downside. So I'm looking to trade with the trend, not try to necessarily pick tops and bottoms. So when you get a violent sell-off like this, it looks like a good opportunity as long as we maintain our bull market status. So I'm going to minimize these guys real quick. And then let's switch over to actually, I want to take a look at gold really quick. Gold's starting to show a little bit of strength right here. Definitely paying attention to that. Bounced basically off the 528 moving average. We're finding resistance at the 377. Got the hard buy signal. Last time that happened, we got a nice move to the upside off of that, but we still maintain the overall like bearish move. And again, this is what we're paying attention to. We have lost the slope on the 200 simple and the 200 exponential, and we're below it. So this to me looks like the beginning of a potential bear market in gold. Now, could we easily flip this back over, get back above it, and then continue to the upside and it was just a big fake out? Of course. But when you're this close to, something potentially like flipping into a bear market, for me, I'm not trying to get like overly bullish on an asset. Although I do expect this to find support down at this level or maybe get one more stab down, and then continuation to the upside. We did maintain the channel, which was obviously the most important thing, but I am expecting us to get rejected at this heart line of the channel. So if we move back up here, you know, potentially 1750 to like 1770, you know, and then like a pushback down. We also have this red trend line coming in right here at the same area. So, you know, we could easily get another rejection and back down, take out this low one more time, and then get our burst to the upside, you know, or, you know, sell back off or just continue up here. But gold is not looking particularly great to me at the moment. So now let's switch over to silver. So silver, you know, obviously slightly more bullish than gold. Same thing, you know, found support twice, same area, exponential. We're inside essentially this channel. You know, we have technically broken down and sold off here. We're holding support, but we're just slowly getting pushed down by the moving averages now. Again, I would expect at least a move back down here to like 24.30. Also, if you're paying attention to what is happening right now, there's some key, very important things taking place. We are currently seeing, you know, the spot market price has diverged like substantially because of premiums. So what does that mean? It means that the spot market price is what the actual price is, the value, the cost associated. But when you go to buy actual physical, they're charging premiums, which they always charge premiums. So it's not that big of a deal. You would expect it. But the premiums are at like all-time highs right now. So that's what we're paying attention to. Hey, which Mara did you want to see? Are you talking about Marathon? Digital Holdings? Or are you talking about... Just let me know specifically what you wanted to see. And I'll pull that one up here in a minute. So we're seeing basically a big... It's like the premium that the middleman charges is essentially what it comes down to. So people say, well, why don't people just get 1,000-ounce bars off of the COMEX and then arbitrage them? Well, that's what people do, but it takes time. This isn't a crypto that you can just instantly liquidate. We're talking about actual physical metal and stuff like that. So now exactly what's happening is that exact situation. So if you are familiar with Mike Maloney and goldandsilver.com, they now are doing that exact thing. They are basically buying 1,000-ounce bars off of the COMEX, and now they are doing exactly that. You can go on there and you can buy, you know, you can basically have them custody a 1,000-ounce bar and you can own a portion of it. And then when you're ready, you can take physical delivery. So you don't have to pay those crazy premiums. So he's brought the premium basically down from like $5 on a regular ounce of silver down to $2. So now you can pay a $2 premium. So he has arbitraged that massive difference. So he's literally done it. So what do you expect to happen now? You know, it's obviously, if that's an amazing deal and there's just massive demand for silver, you know, one of two things is going to happen. You're going to see all that sell out immediately, and that, you know, that was it. And then he'll just keep doing it and keep making free money. Or you're going to see the spot market and, you know, the premiums start to come back into line like normally. So that's what I would expect to happen, is the spot market and premiums to come back into line. And everybody's saying, why don't they just stop manipulating it? Why don't they stop manipulating? Well, it's not necessarily actually manipulated. What it is we're getting middleman. If you try to buy physical silver right now, you're getting middleman. You're getting charged a ton of extra money by your pawn shop or by your, like, you know, digital seller online or whatever, because they're having trouble getting product. So if they sell you product at, you know, $27 or $26, because that's the price of silver right now, and then all of a sudden price drops down to $22 and they only charge you a $2 premium, well, what's going to happen? They got absolutely crushed because they have lost money, because now price is, you know, $24. They sold it to you for a couple bucks over, and, you know, then they don't make any money. And that's literally, they don't care if price goes up or down. They make their money buying something and then just charging a couple dollars extra and selling it to you. Now, do they also have massive holdings? Yeah, of course. So they're biased, you know, to push people into it or tell people it's bullish or whatever. But in the end, those businesses make money off of the premium. So it's in their benefit to make it seem like there's a massive shortage and there's no silver and you can't get any silver, because they're the ones who charge the premium. So if you have 5 main like online retailers of like silver and gold, and they all say, oh, we're having shortages, it's taking forever to get product, you know, everybody just charge $10 premium on Eagles because they're hard to get right now, it's in all their benefits for nobody to just be like, this is ridiculous, let's charge $5 premiums on Eagles like we always do. It's in all their benefit to just say, let's just all charge $10 premiums or $11 premiums or $12 premiums because they all benefit from it. So you basically just have 5 or 6 dudes who own these massive like online brokerages or exchanges or whatever you want to call them, like retailers, just say like, hey, don't sell any Eagles for less than $10. Okay, cool. And we all win. So if there's any like collusion going on right now, you could argue that it's going on between those middlemen, and that somebody like Mike Maloney, who we can talk a little bit more about him later, he's basically like making a little money, but essentially like the hero of this situation because he's not screwing everybody over. So, look at it however you want to. You don't have to agree with me, but in all actuality, that's a fact. That's exactly what's happening right now. He's basically saying, I will sell you product at a reasonable cost. I'll hold it in the meantime while premiums are high because I'm not going to deliver you a 1,000-ounce bar. But once the premiums come back down, or even now if you want to, you can essentially just like trade that over. And, I can physically deliver you like 1-ounce coins or bars or whatever, but you're going to have to pay the difference. So if you just wait till the premiums come back down, you can just swap them out, pay an extra $2 or $3 an ounce and get Eagles, or an extra $1 or $2 or whatever, and just get like 1-ounce bars or 10-ounce bars or whatever. So, it's exactly what you would expect to happen, but it's not a crypto exchange where if Bitcoin's price is $60,000 on one exchange and it's $40,000 on another exchange, where you see instant arbitrage where somebody has Bitcoin on both exchanges, so they literally just sell it on the $60,000 exchange while they simultaneously buy it on the $40,000 exchange, and then the prices level out and immediately it's fixed. Silver and delivery, you have COMEX contracts coming up like once a month, and then you have to get physical delivery, and then you have to pay like delivery charges, and you have to be like registered and be like eligible to take delivery. So it all takes time. So, how long has this crazy premium been going on for? Like what, about a month now? So how long would you expect it to last? 1 to 2 months, because people are going to do that. They're going to take arbitrage and, basically just close that gap because that's free money for them. So, okay, so we got Marathon Digital Assets for you, buddy. Mara. Overall, let's look at the longer time frame first, and then we can kind of move in on it. Overall, obviously, we are in a massive bearish pattern right now. Depending where you want to draw it from exactly, you basically have this descending support line coming along the bottom here. We've got 1 solid touch, 2 solid touch, 3 solid touches. That's what we like to see, ideally. And then again, depending how you're going to draw this out, if you're going to go from wicks, if you're going to go from bodies, if you go from wicks, we're probably at, the top of this range without breaking out. If you go from bodies, this thing could continue to move up a little longer. Again, I'm on the monthly, so you could potentially have a move up here to like $85, or you could potentially be at the absolute top right now, without a breakout of this pattern. If you do break out of this pattern, it's probably going to be, a crazy move. But again, depending how you draw this thing, if you're going by like, wicks, essentially, we got barely, you might make it up to like $54, $55, and then obviously if you do break out of this pattern, if you just take like from the top of the pattern to the bottom of the pattern, move it on up here, assuming that we're going to wait and go by the top portion right there, obviously because this is in log mode, the arrow gets like tiny when you put it at the top, but it's based on percentages. So, you're looking at a $176 move, which is technically still below the previous all-time high here. So if we next pull up a Fibonacci retracement and we drop it at the top right here and then put it at the bottom right here, what do we got? Basically, your breakout is going to be, the top of your range is either the 786 or the 886, basically, is where that key resistance is at. You've already cleared all the other resistance, stair-stepped it up along the way. So, it's still an internal retracement. If you're in this thing, great. But, probably should be really thinking about taking some profits here. Depending on if you got in it at like 35 cents or 50 cents or $1 or $10 or whatever, you're probably up a massive amount. So I would definitely be taking something off the table here. up in this range right here, or at least be trailing my stops. But moving average wise, you know, you're back above the 89. You closed at it, got rejected, you know, basically got rejected pretty violently on this monthly candle, sold off, and now you're back above it. So what would I look for? I would look to see if when this monthly closes, you got 2 weeks left, do we hold $32? Because if you hold $32, it's going to look like a break, confirmation, and then it looks like you're going to get continuation, at which point in time $56 or, you know, basically like $100 is going to look very likely. But overall, you know, you're in a downtrend. This thing goes back to 2012. So it's been in a downtrend since 2012. So you got 9 years of a shitty chart, constantly making lower highs. So low, you got a high right here. You have a lower high right here. You could argue that that's your lowest high, lower high. But, you know, I would say that's probably the lower high we're paying attention to. So until this thing at least takes out $134, in my opinion, it looks like shit. And until it actually takes out $230, it definitely still looks like shit. Everything is making all-time highs right now in every single like market, pretty much. Just about. I shouldn't say everything, but so this is, in my opinion, there's no reason to trade something like this until it breaks all-time highs. Now, contrary to what I just said, when you're down here at a key support level, by all means, that's a great time to take an entry if you're trying to pick bottoms or just throw a couple bucks in this thing and see what happens. But when you're at a top, this close to key resistances, this close to internal fib retracement levels in something that's been in a bear market for 10 years, you know, if you're in this already, by all means, try your stop, you know, possible upside potential. But I would be looking to take profits throughout this level, you know, and I definitely would not be looking to enter anytime soon until we got at least a breakout, you know, confirmation of support, continuation. But honestly, I wouldn't even pay any attention to this thing for a potential buy until you broke out to a new all-time high. But again, not to be like overly bearish or anything. I'll jump over and chat in a second and see what's going on with the messages. But, you know, this, like I said, there's a million other charts that look better than this. In my opinion, there's still, you know, we're at $40 right now. And the all-time high, at least on, yeah, I'm assuming that was like the IPO. The all-time high was $231. So you have from $40 to $230, you have a $190 range, which is basically the equivalence to like 5xing before all these people that have been trapped underwater can get out of this trade. So many people are underwater in this asset right here. And you're at, look at this resistance right here. This is a key resistance level right here. You see it like consolidated, pushed up, and then broke down, and then came back up and found resistance again. So this is a support, flip resistance. That's the resistance from when you broke down from it. You came back up to resistance. So now here you are at it again. I would expect this key level right here, this 786 and the top of this range right here is like extremely strong resistance. So at $56, if it makes it up to that range, which is probably why there's a big wick right there already, is I'm not the only one thinking this, I would get out of this position and just wait for a retracement. I mean, it has not had a retracement since $2, you know, on the monthly, on a longer time frame. Has not had a retracement since $2. So, you know, and then just to be fair, you know, because I have been like overly bearish on this thing, if we switch back to, you know, a daily, this is when you want to get bullish on it. You get bullish at a dollar on the daily chart. You know, once we get the blue flips to the upside, we get the slope switches over, You know, I'm not the only person thinking that, because look at that parabolic move. It went literally from $1 to $5, like right away. Came back down. You had another chance to buy at $1.59 when we found support perfectly at that 236 level. And then from there, you know, it's just been parabolic. Hasn't got, I mean, this is, you could argue this is a decent retracement right here, but what you want to see is, you want to see something like this, a retracement like this, you know, before you potentially get like, before you potentially enter with like expecting like more of an uptrend, because you would expect something like roughly like this to take place. Let's say we make it up to the 786 and then it sells off. I would expect it to do something like this. You know, and you could get, you know, let's say we come back up and test the all-time high again. Let's say we come back up and test the 886. But, you know, this is what I would expect it to look like if it was going to shape out. And, you know, if you wanted to get like a better idea as to what's taking place. You could see when we moved up here, we sold off just above the 0.5. So, you know, basically got a 50% retracement of that move. And then from there to potentially, like, let's say we make it to the 786, the 0.5 move would basically be exactly what we're talking about. It would be the exact area that I, you know, just, you know, and you can see I can roughly point out where these are going to go based on these key fib levels. But then also, if you want to look at the fib extension and take it from the 1 down to the 2, you'll see the push up here. We made it already to the 2.618. So that's a key level where things often top out on like a wave. So if we already made it, excuse me, if we already made it to the 2.618, I would expect this to be at least a local top. So you could argue that the top's already in. If we do take this out, I would expect to move up to 786. But the risk reward is like, you know, this is your range right here where I would expect it to top out. At which point in time, you could look for a re-entry, you know, somewhere back down in this range right here. So, but that's what I'd be paying attention to. Again, there's a million other charts, though, that look better than this. So, but, I mean, if you're fundamentally, like, bullish on this thing or whatever, or you love it or you're already in it or whatever, there's plenty of reasons to trade it. But I would be looking in this range specifically to take profits. So I'm going to jump over to chat real quick and take a look. And then I've got a couple other assets I want to run into. XLE, AMLP. Yeah, oh yeah, no problem. Actually, I think I have XLE on my list of things to look at already. But yeah, no problem. And then ADA, Cardano. Yeah, I can look at Cardano. I mean, everybody knows how I feel about Charles, but yeah, I will definitely take a look at it for you. What's up, brother? Morning to you. Definitely took a lot off the table. Yeah, that's smart. That's smart. And this is the key level where I would be looking to enter a short. I mean, you could potentially look at entering a short, but realistically, man, you know, the way I look at it is when you're in a bull trend based on the daily and you're above the 200s and they're both angled to the upside, you're not looking to like naked short something. You can hedge with a short. So say you own like 10 shares or, you know, 10 crypto coins or whatever. I would potentially like go flat by entering a short for 10 shares or 10, you know, Bitcoin or whatever, so that I'm flat in that position and then wait for the pullback. You know, essentially like you still have the same amount of coins. You make money on the way down. So your short gains dollars, but you lose the equal amount of dollars because you didn't sell your asset. So you're basically just flat in the market, but you have the same amount of coins, you have more dollars. But you're, you know, the net worth, if you just sold all your coins and closed your short position, is going to be exactly flat. So I'm not looking to net short something in a bull market, in a bull run. You know, once it flips over and you start going bearish and it looks like bearish long term, then I will like sell my position or go net short in something. But, you know, I don't like to like, I don't like to be in a naked short or overly short, like as in like if I own 10 Bitcoin and I'm short 20 Bitcoin, I'm not going to do that in a bull market because I don't want to be upside down in a position and potentially like lose the actual Bitcoin that I have because I got greedy. So, but yeah, you could enter a short, but I wouldn't enter a naked short essentially. So, yeah, so we'll definitely take a look at those other ones here in a minute. I'm going to run through a couple other ones I have planned out, but real quick, I'm going to take a drink. All right, so yeah, once we get a clear top in place, definitely, you know, and again, there's nothing wrong with hedging your position with a short. But again, I wouldn't want to just go net short on something. Oh yeah, for sure, brother. Glad to take a look, man. Anytime. Okay, so I looked at a couple other cannabis stocks. I have a buddy who's like heavily invested in this one specifically. I've been telling him forever to get out of this and just get into, you know, like Canopy or one of the other ones. Tilray specifically, I think is the strongest, but I want to take a look at this one anyway, because actually the other ones look more bullish than this, which is bad if you're already invested in it and you're underwater or something like that. But it's good if you're looking to potentially enter a position because the opportunity is still there for more gains. So this is right at decision point. We always talk about this, and a lot of times it seems like it's in hindsight because I tell you should have bought here when the moving averages went from bullish to bearish. Well, look at this. We topped out way back here. I mean, years ago, back in 2018, way back in this range. And then you'll see we went flat on the 200s and put in a series of lower highs. This is when you want to get out of the market. It was very obvious that it was topping out here. And then when we broke down from the 200 exponential and simple, right around this range at $87, you see the 200 exponential and simple flipping over and then entering a bear trend. Well, what's happening right now is we pushed above the 200 simple here, continued up, got above the 200 exponential, and then lost it. That was like the little, whatever you want to call it, like short squeeze or like, that little Wall Street bet situation going on with like silver and cannabis stocks and GME and all that crap. So when we came back down this time, we found support at the 200 simple. So right now, both these moving averages are basically flat. So this is like a decision point in the market. What is the likelihood now of this thing entering a bear market again and selling back off versus it going up right now? This is a key time to take a good trade on something like this or a long position on something like this. Because yes, is it possible we come back down here to $4? For sure. And what would the risk be? It'd be like 60%. So that sucks. Obviously, if it comes back down, could go to zero, could put in a new low. But if you look at, and again, 60% looks horrible. Nobody wants to take a 60% loss on anything. But if you look at the upside potential back to the previous all-time highs, you have 60% to the downside, which again, that sucks. Nobody wants to lose half their money, but you have a 1,238% to the upside. So just putting into like a, again, you're not going to put a stop loss in place for 60%, but let's just say roughly you were expecting this thing to at some point in time come back up to its all-time highs. And this is a weird one to look at because this got all crazy. This chart and everything about it is all messed up because there was like an acquisition took place and the stock got like revalued and everything. So this might not even be an accurate representation, but essentially you have a massive potential move to the upside. Matter of fact, because I can't remember what it was. I think this thing got bought out or damn. Yeah, again, I don't even want to get too far into it because it is one of the ones where it's like essentially like charting Tesla. If the chart wasn't like adjusted for the stock split taking place, the price is like all fucked up. So like my drawing tools that are on here are all at like wrong levels and stuff. But what's this look like to me? It looks like we're potentially going to be putting in a shoulder down, a neckline right around this area here, the head, come back up. This is our neckline again. So could we come back down here and, put in like a shoulder down here at like 550? If you looked at how I did TA on some of these other cannabis stocks, I've already said I expect potentially like a little more downside. But if we do consolidate here long enough and get a positive trend on these things, this thing has massive potential to the upside. So that's ACB. Let's look at CAT next. This is like one of the best charts in existence right now, in traditional markets at least. If you look at, I'm on the monthly on this thing right now. If you look at it, this is the best kind of chart you can have. It goes back forever. It's back from the 1960s, okay? And we're at all-time highs right now. It's fundamentally bullish as hell. It's an American company that makes tractor equipment, which is like used for building infrastructure. We have a potential massive infrastructure plan, potential like green energy, like movement that we're going to need to like build and create like things that we need giant tractors and machines for. So Caterpillar is fundamentally bullish, technically bullish. There's nothing else to it. This is probably one of the best, potential long-term ones. Now, would you have been better getting in off the 200 moving average? Like, back at one of these previous points, back at that violent sell-off or something? Yeah, of course. But we're in blue sky breakout. There's no reason for anyone to sell this ever right now. There's no reason for anyone to sell this. Why would you sell it? It's fundamentally bullish. It's technically bullish. There's no one that's upside down in a position that ever bought this asset ever. So, no, why would anyone sell? They would only sell to buy more of something else that's less valuable or like more undervalued in their opinion. But again, should everyone own some Caterpillar? In my opinion, yeah, probably. you know, unless you like don't think that fundamentally it's going to be good, or you just assume that this is like the potential top. But, you know, again, it's not financial advice. I'm not your financial advisor, but, you know, this is literally one of the best charts you can find. You know, it has a massive time horizon. It's fundamentally awesome, technically awesome. We're at the 1.382. My next key target would be $267. It's like a 15% move up here. But after that, it would be the 2.618 at $529. What is the likelihood of this thing getting a move up to $529? I think it's very likely, but, you know, how long is it going to take to get there? Probably, you know, a few years. This is a long-term trending trade. You know, fundamentally, technically, great investment in my opinion. I am obviously invested in this, but I don't recommend anything for anybody else. Just specifically, very strong chart. XLE, I think that was one of the ones you asked for, wasn't it? XLE and yeah, okay. Yeah, perfect. Way to be on the same page. So yeah, this is basically energy sector. So obviously, if we scroll back, matter of fact, this is an interesting chart. You know, obviously, fundamentally strong as you would potentially think. Energy in the future is going to be important, in like the green movement and all that stuff. But when it topped out back here at $100, it sold off back down to $23. And now look where we're at right now. We're at the 200 exponential, still below 200 simple. So if this thing is going to get rejected, it's probably going to be like right here. And you'll notice also key support. Now it's going to act as resistance. How long is it going to act as resistance? We don't know. But what happened last time, we got down to like the key support down here. We pushed up, got massive rejection, came up, rejected, consolidated at it for a while, and then broke above it. We're close to getting the monthly 821 cross. Let's go now to the weekly. These are the best charts because they have the longest time horizon. You know, again, we're right at the 200 exponential, just below 200 simple. So if this thing breaks above $60, it's going to start looking good. You know, if you already got into this when it was getting like the 821 cross down in this range at $37, it looks great. You know, flipped over, bullish control zone. You know, weekly, this thing looks good. Long term, but right now it looks like it's going to get rejected right where we're at. And you see it right here. You know, key resistance, previously support, it's going to act as resistance. So long term, I think this looks okay. But again, there's so many other things that potentially look better than this asset, and it looks like it's right about to get rejected. It looks like it's at like the top. So part of the reason I was pulling this up specifically is, you know, in my opinion, it's time to be taking profits and getting out of this. Although it potentially has like, you know, fundamentally it looks good long term. But definitely profit taking level. Definitely looks like it's about to get rejected. But, you know, obviously it's sector of interest. If we're going to potentially be, you know, energy looks good in the future on a long time horizon, but that does not mean that now is the time to enter. Where do I want to get, you know, and again, if we take a look at some fib levels on this thing and get an idea as to, let's switch back over to the long term. You know, if we look at that key fib level to that previous sell-off, you know, what do we bounce? Look at that. That's the 618 right there too. So that's where we're going to get rejected. I mean, like to a T basically. I would expect it like almost factually to get rejected here, which is, you know, why you want to take profits on this thing before it gets a massive sell-off. Because previous time it went down to zero, then we, you know, put in a higher low down here, slightly higher. Didn't quite find support in the 236. So are we going to come back down to $32? Or are we going to come back down to $40? I would say we're at least going to come back down to $48. So there's going to be a better entry along the way here at some point in time. Oh, whoops. I meant to do it the other way. So if we top out, let's say right around this level, we could say slightly higher. Let's say we make it up to the 618, get rejected off the exponential and simple moving averages. You know, I would expect it to basically come back down to like, I would think honestly it would find support probably closer to like 40 bucks. Could we come back down here and find support on top of the moving averages at like 46? For sure we could. But you know, this is something where we're at like the top of the potential range, at least short term, and then I would expect like a couple months of consolidation or, you know, pullback before continuation. What was the other one you asked for? All right, and then Amlp. Again, you know, looking at the monthly on this thing, been getting absolutely crushed since, you know, basically topped out in 2015, so 2014. Been getting absolutely decimated. You know, obviously the time to enter was after this, you know, close up here. You know, even if you didn't get right in right then, the time to enter was off the 236 at $19.80. I don't know if you're already in this or potentially looking to get into it, but, you know, that was the place to enter at. It's clearly, very, very clearly respecting the Fibonacci levels. So that's, I mean, these are the best charts to trade because it's like clockwork. You know, even on the way down, it was finding support at the 618. Once it broke down to the 0, it came back up exactly to the 382. Didn't get a monthly close above 382. Came back down and found support exactly on the 236 on the monthly. Blew through, you know, got rejected slightly a couple times at the 382. But what's going to happen now? It's going to get rejected at the 0.5, like $34. Or maybe it continues up and gets rejected at this previous key support level right here at the 618. So I would say you're either at the topping area, at least temporarily, or about to top out at like closer to like $43. So there's potentially, you're either at the top or there's still a decent amount of meat on the bone. But I wouldn't be looking to enter this right now. I would potentially be looking to exit or at least trail my stop. Where would my next entrance be? You know, regardless of if we top out here at the 0.5 or if we make it up to the 618, you know, I would be looking to re-enter down here at like $27. I think it's very likely you would get back in at $27. So 20% pullback or more depending on where it goes up to. But, you know, again, I always look for stuff that's either crossing over the 200 and potentially entering a bull market or stuff that's already in a long-term bull market like blue sky breakout. So here you have the slope has just flipped over blue. So this is a nice potential entry point for it. But again, the entry point would be like that $27 range. So we already broke ahead of that coming up here to key resistance. So we might not make it back down to 27 bucks. So honestly, depending on what the time horizon is, this thing really doesn't look that bad on the daily. It just looks really bad on longer term time frames. So I would try to get a better entry than right now. But you know, what's the meat on the bone? 4% to the upside or 36% to the upside? You know, what's the potential risk if we come back down to the 382? 17%. So I mean, what are you really looking at? You know, if we top out right here, that's a 1 to 4 risk reward ratio if you entered. If we top out right here, you know, you're looking at like a 2 to 1 or something like that. So there's not anything good going on right now. I would have to wait for a pullback here. You know, you could basically put a channel or some kind of like diagonal support in place right here and see what's going on with that and try to, you know, basically like get a retest of that as your entry point. Oops. And I think that would probably be your best bet because, I mean, you already retested the 200 exponential and simple multiple times right here. So is it possible you never came back down to the simple? Is it possible you just continue on up and this thing just moons? Yes, but I think it's very unlikely, especially with so much overhead resistance. So I would be looking for, you know, you have 3 key levels of support right here. You know, you have basically this diagonal trend line that looks good. You have your 200 simple and exponential moving average that look good. And then you have the 382 Fibonacci. So I would really expect an almost I would expect this thing to come back down to like 27 bucks on a close and find support. So that's what I would be looking for. Now, if you're already in this thing, I would be looking to potentially take profits. I would take some profits, take a little something off the table right here. If I was already in this thing for sure, I would want to get out at like 43 bucks and wait for, you know, a stronger pullback or something like that. But overall, not a great chart, but entering into, you know, solid levels on the daily. All right, let me check out what we got going on here. Took a lot off the table. Yeah, okay. So what else did I have going on here? XLE, more ECB. Okay, so we made it through all these ones. Whoops. Did it again. All right, so let's flip over here. All right, so we got the Zoom. Zoom was next one on my list. You know, obviously this is one of the ones where it's already had a massive move, massive run up, fundamentally strong, but it's had a huge sell-off already. So the real question is Zoom just going to go away and no one's going to like video chat anymore? Or, whoops, you know, or did this thing just get like basically people taking profits and then it's going to continue to the upside? So it's had a 47% sell-off, you know, basically slightly below the 200 exponential and simple. Could it easily move back to the upside and save the slope right here and get continuation? For sure. Could it easily dump down from here and that was it and enter a bear market? For sure. But, you know, if you're fundamentally bullish on this thing, and technically you can still be bullish, you know, at least for a little while longer, I think this has like some definite potential. So, you know, this is the best case scenario. If you think something has strong fundamentals and then it gets a decent sell-off, you know, it looks good to basically get continuation. I would expect this thing, you know, to continue to the upside. Basically got, depending on where you fib from, oh, I already had it in there. Whoops. Depending where you fib from, you know, it already got a 236 of like the massive move right there. It's operating inside of this descending channel. I mean, it looks kind of like gold, honestly. You know, it looks like gold. Came up here, tried to break out to the top, got rejected just below the heart line. Could it easily continue and come back down here and flip this over bearish and go? For sure it could. It could easily get continuation and then break out to the upside. But, you know, if you were interested in Zoom or you were in Zoom and $600, it looks real good at $350. And in my opinion, you know, fundamentally, I think that honestly, we're going to go right back to, you know, even once the reopening happens and quote unquote, everything goes back to normal. I think a lot of the changes that have taken place societally are permanent. So I think realistically, things like video conferencing are going to permanently be like a new part of society. And like technologically, you know, we are moving forward. You know, less people are going to work in the office, or if they do, instead of going into the office 5 days a week or 6 days a week, they're going to go into the office 2 days a week or 3 days a week. You know, or maybe they work remotely completely. You know, one of the limitations for like quality of employees is obviously location. When everybody was expected to like come to their job every day and perform at their job, and, you know, now we don't need that anymore. Now you can work remotely. And then all of a sudden it's like, well, wait a minute, we don't even need to hire people in the same state or same country anymore, like even the same continent. Now you can just hire the best person for the job. And now we don't need to pay people as much because we're located in New York City, and you got to pay people more in New York City because cost of living's more. Now you could pay somebody in a different state or different country like less proportionately, you know, and they might be better at their job. So there's definitely like more potential for things like this long term. Now, will it continue to sell off? Same as gold, basically. Do I think there's potentially more downside? Definitely. There's definitely potential for more downside. Now, is the downside going to be more than the potential upside? Well, I mean, probably not. I mean, like realistically, even if we sold off now from the 236 down to the 382, 28% to the downside, But, you know, back up to the all-time high, assuming this thing like stays, you know, technically strong, you know, you're looking at 71% to the upside. So it's like 3 to 1. So, you know, basically 3 to 1 trade on this thing just to retest previous high. Even if it doesn't make it to the previous high, you know, and you get like a key fib retracement, again, saying that the top is already in and now the bottom is in, you know, even if we get a move back up to 618, you're looking at 459 or, you know, potentially like 500. So, you know, this thing I think looks good for potentially like long-term, fundamentally, technically, also, you know, potential like scalp trade. So, but we are at key resistance. We're at the heart line, just bounced the bottom of the channel. I would pay attention here and, you know, see what happens with the 200 moving averages and this situation. But Zoom is definitely one of the ones where, you know, it was a big trade early in this like market, in this rally and everything. But there's some potential for, you know, it's same as something like Tesla. If you're overall bullish on it, right now the chart doesn't look great because like the market's broadening out. But like overall it looks good. So let's switch over to Apple here. You know, same situation. We were talking about this recently. You know, we topped out here at 145. Got a decent little pullback. Nothing too crazy. You know, what do we get? 20% pullback right there. But, you know, pullback to the 200 exponential and simple. So are we going to be able to break back up here and continue to the upside? Or, you know, are we going to continue to the downside? We're paying attention to this channel. And when, you know, the channel breaks, we're closer to like the top of the channel right now. Not sure why this is off so much, but let's just screw this channel. I must have just moved it a little bit. I don't know what the hell I did. I mean, roughly, assuming that's our like channel situation going on, something like that. We've got basically our top up here. You know, we're close to the top of this channel. But that's essentially what we're looking at. You know, are we going to find support here at the heart line, move back up to the top, and then get our break, our measured move, you know, back up to like 786 or at least the 618? You know, I think it looks very likely. Could we come back down here to the 0.5, to the exponential, to the simple? I think that's probably more likely to happen. But again, you know, you're looking at like an entrance closer to like 113, 114. Are you like long-term bullishly looking at Apple? You know, I think Apple's probably like going to be like a staple of the future. I mean, it has been basically since like the iPhone 1. I don't see any reason why it wouldn't continue. So, you know, unless something comes and dethrones like the master all of a sudden, like, you know, pulls a Facebook on MySpace. But, you know, I think overall, decent pullback, could get some more downside, but looks good to me. Definitely one I'm looking at, and that's why I'm looking at it. PayPal, talk about this one here. Again, you know, obviously like massive move up through like this whole situation, online payments, you know, their involvement in Bitcoin and crypto, $81 move up to $300. You know, if you were looking to get involved with PayPal and you didn't, you know, pull back to the 236, could we come in, put in a lower high, come back down to the 382, you know, or at least find some kind of support at like this previous key support levels or resistance levels, you know, 200 exponential and simple moving average? You know, all of a sudden, like, I mean, $200 looks pretty good for a potential target. So this is one where I would wait to see what happens with the 8 and 21, potentially take out the parabolic SAR and get continuation to the upside. But, you know, definitely has some potential in the future also. Got a ton of price action in this bull market. And, you know, unless this thing like tops out right now and the bull market ends and people stop using PayPal, I think this thing still has massive upside potential. But is it the best time to enter right now? Not necessarily. You know, we're getting bearish control zone, cross of the 8 and 21, about to get the hard buy. Last time that happened was right here. Another 15% back to the upside, and then we came back down and retested that low. So what could we expect to happen right here? If we got another, you know, 15% to the upside from the hard buy area, that would take us back up to like a lower high and then come back down essentially we could double bottom right here at the 236, and by then the exponential and simple 200s would be like back there. So I would probably wait for a double bottom area back down here at like the 220 range, and look for a higher low, try to find some a better entry point on this thing. But if the 8 and 21 cross, take out the parabolic SAR, might be worth potentially entering into a position. What is the significance of Bitcoin futures when Bitcoin trades 24/7? Okay, so it's, without pulling in like actual volume data and like numbers specifically, let's say like Bitcoin spot market is half the market and Bitcoin futures is half the market. Okay, so if half the market is closed and all of a sudden we get a price action like move like $1,000 up or $1,000 down, then when the other half of the market opens, when futures opens back up, you have to wait to see, does everybody agree on the price now? Because what is the price of something? It's what people agree that it's worth. If it's cheap, you buy it. If it's expensive, you sell it, right? You say, oh, it's overpriced now. I'll wait for it to be cheaper, so I'm not going to buy it right now. Or I'm going to sell it because I think it's going to come back down because it's overpriced. And the same way that when something goes down and you think, oh, that's a good deal, I'm going to buy it now because it's on sale, that's how the markets work. So if you have one half of the market that's closed and the other half's open, so price pumps up over the weekend and then futures opens back up, and the people that were not participating in the market, because half the market participants were playing in the game all weekend long, Bitcoin's pumping up, and then all of a sudden the other half of the market comes in and they all say, whoa, this thing had a big move up, it's overvalued now, I'm going to sell mine. And then all of a sudden the markets move back into like agreement. They agree on price again. So what happens? Futures will either go up to meet the price of spot, or spot will go down to meet the price of futures. But that's what quote unquote closing the gap is. The gap is just the area between when we agreed last and we haven't talked again to see if we still agree on what the price of something is. So if when the price closed on Friday, everybody agreed on price because futures and spot were at the same level, which is almost always the case. Otherwise, you would just arbitrage the difference. You would just sell spot Bitcoin and buy on futures if it was cheaper on futures, or you would sell on futures and buy on spot if it was cheaper on spot. And that's all arbitrage is. It's just efficiently closing the gap between the markets. So if over the weekend the price changes, goes higher or goes lower, there's people out there who literally their specialty is just arbitrage. They literally just make money off the difference. So they just sell on spot because it's overpriced and buy on futures at the exact same time, or they sell on whatever the opposite of what I just said is. So they essentially just close the gap. They make the difference between. If there's a 5% difference between, they just get that 5% for free just by making that transaction. So that if you owned 100 Bitcoin and then you sold 10 on spot and bought 10 on futures, you still own 100 Bitcoin, but now you get to capture the price difference in between. So you make that percentage difference, but end up with the same amount of Bitcoin. So that's the idea, is essentially it's just agreeing on the market. If you have half the market says it's worth one thing and half the market says it's worth the other, eventually they're going to agree because the people who think it's overpriced are going to sell it. The people that think it's underpriced are going to buy it. And then you get like essentially like spot and futures come back. So that's all it is. And that's why I say the Sunday trade is the best trade in crypto. That Sunday morning trade or Saturday night trade is the best trade in crypto. It's the easiest trade you can ever make because 90% of the time, whatever the difference is gets filled. The gap gets filled. So if spot runs up all weekend long and then futures opens, futures either opens way up and then comes back down to fill the gap, or spot sells off all day Sunday to meet the gap and close it before futures opens. So it's an easy trade. And I don't know the exact statistics. You could go through and look at every weekend for the last like 2 years or whatever, however long you wanted to go back and look at it. But look at every weekend. Fundamentally, who's involved in futures? Big business, tech firms, like the big money. Who's involved in spot? Also those same people, but mostly just people that are overall bullish on crypto. So like spot markets are typically more bullish than futures are, because spot market is just people that are bullish on it and like the asset itself and believe in it, as where future markets are just people looking to make money. Overall, they might be fundamentally bullish on an asset also, but when they close, you now have, if half the people on like, you know, exchange like futures markets are bullish and half the people are bearish or just don't care, and then all of a sudden that market closes, but 75% of the people in spot markets are bullish, you now have overweight bullish people. So what happens every single weekend, almost without fail, price runs up almost every weekend without fail. You might get like one weekend a month or one every 2 months when it sells off over the weekend, but it almost never happens. Weekends are almost always bullish. That's why I always said, like, the best day to buy Bitcoin is on a Friday and the best day to sell it is Saturday late night, because chances are it probably ran up all day Friday after futures closed, all day Saturday, and then like Saturday night around like 8 to 11 p.m. it starts selling off. But again, you know, it's not financial advice. I'm not your financial advisor, but take a look at a chart, look at the weekends, look at where futures closes, and then look at what happens like Saturdays and Sundays, and you'll start to see like a very clear pattern. Hang on one second. I'm going to take a drink and then I'll answer your question. Do I think they can just keep printing money forever? No, they can't print money forever. Eventually, people will lose faith in it. You know, after a while, nobody wants it, which is already what's happening now, which is why everybody's rushing to buy every kind of asset they can get their hands on. Which is why you have like massive bubbles like NFTs taking place. Like, people are just buying junk because they don't want to have like currency. You know, and obviously it's not healthy overall for like markets long term, but it is what it is, like in the meantime. But no, I don't think they can. I think eventually, like every, you know, it's the argument that eventually every currency goes away. You need to have like sound actual money. That's why gold and silver are always going to be valuable. They've been valuable longer than anything else has, you know, in existence. For thousands of years, they've been money. So they're going to keep being money. It's just a matter of, are other things also going to be valued in the same way as money? And that brings me to a good point. A lot of people are like down on Peter Schiff right now. And he's one of those dudes who's been like fundamentally like super bullish on gold. And like this I like his podcast. I find him amusing. But, you know, you got to take it with a grain of salt. The dude is obviously in a cult. He's in the gold cult. But one of his videos popped up or whatever, and I wasn't paying attention, and it just starts playing in the background. And I'm like, man, I'm surprised I haven't heard this. I've heard like most of his recent stuff. And then I look at it, and it was like 2012. He was saying the exact same things that he's saying now, back in 2012. So the dude has literally been wrong about the system and all of it crashing down, and they can't keep printing money, and Great Depression's coming for like the last 10 years. And he's probably been wrong for 20 years if you go back and look at his stuff from 20 years ago. But he's just one side of a coin. He's the cult, bull cult for gold, okay? And now you have people like you know, Anthony Pompliano, who is, you know, all in on crypto. He's super bullish on crypto. He's in the crypto cult. But they're just two sides of the same coin. The only difference is that when they flipped the coin, it came up heads, and heads is crypto. So all the people that were in the crypto cult are winning right now. All the people that were in the gold cult are losing right now. That's the only difference right now. We flipped a coin and it just came up heads for crypto. But you're still in a cult. And that brings me back to, now you have, you know, people always say, oh, I wish I would have never listened to this person, or I wish I would have listened to this person. Well, don't find the people that were wrong or right, but still are not making sense. Because somebody who says they're 100% in on crypto or 95% in on crypto is a moron. They're a moron because all they did was went all in on something and it rolled red instead of black. The same way that somebody says I'm all in on gold and I hate crypto, they went all in on red and it came up black. So that, you know, it's stupid. You need to diversify your portfolio, be intelligent, and invest accordingly. So that brings me back to somebody I talked about earlier, Mike Maloney. Okay? He is the owner or one of the owners of goldandsilver.com. So he's obviously a gold bull. He is also a strong supporter of cryptocurrency. Why does it have to be one side of the coin when you can just bet on both sides of the coin and win both ways? Because when you flip that coin, if it comes up heads, he wins because he's in gold. And if it comes up tails, he also wins because he's in crypto. I mean, the dude that's who you should be listening to. You want to listen to someone who makes sense. You want to read a book that makes sense. Read some of his books. Listen to him. Listen to his YouTube channel or podcast. Go back and listen to some of his stuff. You know, that's a smart man right there. And he's not in a cult. Because either way, he wins. And that's what people need to learn about these markets is, like, there's tons of people who love crypto but don't like stocks. Or there's tons of people that love stocks that don't like crypto or gold or whatever it is. But they're just in a cult. There's a reason that you're supposed to diversify your portfolio is because you could be wrong and still be a winner. And that's what it's all about. It's not about winning 100% or zero. You don't want to go all or nothing on something. You either win massively or you lose and just have to watch everybody else win. No, you say, I'll split it up. I'll go a third in gold and silver, a third in crypto, and a third in stocks, or whatever you break it down to. You know what I mean? But it makes more sense to diversify your portfolio because everything acts in cycles. Eventually, crypto has been the right bet. It has been the right bet. Or Tesla has been the right bet. Or Zoom has been the right bet. Or there's tons of things that have been the right bet. Copper has been the right bet. There's tons of things that have been the right bet. But everything is cyclical. So eventually, that thing's going to get crushed. So for all the people that say gold is a store of value, but you can't make money on it, well, when there's a sell-off and everything goes down, gold usually goes down less. But it also has less upside potential. But it's also has the best track record to be like sound money because it's been around for thousands of years and will always essentially like revert to the mean purchasing value where you need so many ounces of gold to buy a house or so many ounces of gold to buy a car or, you know, a cheeseburger, whatever it is. So everything reverts to the mean eventually. So while crypto was the wrong bet from 2017 to 2018 or 19 because it was in a bear market going down, you know, how much of its value did crypto lose? You know, Bitcoin went down 90% basically. 85%. It went down from $20,000 to $3,000. So everybody that was all in on crypto got crushed. A lot of those cryptos still haven't even come back to their all-time highs, so they're still getting crushed. You're still upside down in the position. And then there's other cryptos that have come along that have no fundamental value in the future or will not even exist 2 years from now that are up 1,000%. So that's betting. You know what I mean? You don't want to be betting. You want to be investing or trading or like, you know, going off of technicals but also fundamentals in something. So it's the difference between owning something because you believe in it or owning something because it's going up and it has potential, like through the momentum trade. So in the same way that crypto's been absolutely crushing it for the last like year, when March hit and everything got crushed, crypto got crushed too. Bitcoin went from like, I think it was like $7,000 or $8,000 down to like $3,000 or $4,000. And then it just basically went sideways at $10,000 forever. Meanwhile, if you were investing in the stock market, you were absolutely decimating. The stock market went right back to its all-time highs. Most things, you know, most good trades, tech, you know, Tesla, all these things were just absolutely crushing. Crypto is going sideways. And then you have now Tesla and all those things have topped out a while ago. And now crypto is going parabolic. So if you're in all these different assets, you might not get every penny of everything you would have got by being all in on Tesla and then going all in on Bitcoin and then going all in on whatever the next big thing is. But you can just take profits cyclically along the way. So at key times, you can say, okay, tech looks like it's topping out. I'm going to take some profits off the table at a Zoom, at a Tesla, at a whatever, and put them somewhere else that's undervalued, and then vice versa. I can, once crypto tops out, I can take some of that money out of crypto and not eat the 85% to 95% drawdown in crypto. And, people say, oh, this time it's different. Crypto's got a bottom in. It's never going to go back down. I guarantee you, I would literally bet that there is another cycle, the 4-year cycle, that ends with crypto going down between 60 and 80% again, because it's always happened before and is going to continue happening until it doesn't. And that's what trending is. When something trends, when there's cycles, it's the way it happens. It just happens. Bubbles get big and then they pop and then they go back down. But if they're actually valuable fundamentally or technically, like long term, they continually put in higher lows and higher highs. And that's what Bitcoin has done for the last 10 years and, has been like the best performing asset for 10 years and will continue to be the best performing asset for 10 years to come probably. But it is going to have massive drawdowns again. Is it going to draw down from 60,000? Is it going to draw down from 100,000? A quarter million? A million? I don't know. No one knows. But it is going to draw. It's going to go down 60 to 80% again. It will. I'm betting on that 100%. And I would take that bet all the time. And, in the same way, I would bet that maybe the stock market doesn't top out right here. Maybe it continues on up another 50%. But eventually, the stock market's going to have another 50% pullback. Because it just happens. That's just what happens. Everything has pullbacks. It's all cyclical. It gets overvalued. Everybody rushes in. Momentum goes up. It loses momentum. It goes back down. So the best thing to do is listen to somebody who's making intelligent decisions, not betting with what should be like your future or your investment portfolio or whatever. Commodity trades that I'm interested in other than gold and silver. Copper looks amazing. Obviously it's already had a big move. I'm a big bull on uranium. I think nuclear power is going to be the future as people realize that, especially with all the stuff we're doing right now in the United States, like, oh, we don't need this pipeline anymore because we're trying to be like green. Well, how are we going to build all this green energy stuff without oil? So we're going to pay a ton more for oil now. Oil prices are going to go through the roof to try to build all the stuff that we don't have built yet. That doesn't make any sense. So I think nuclear power is the future one way or the other. So uranium, I think is massively undervalued, hasn't moved yet. I think the uranium trade is huge. Platinum, I think platinum has some massive, what's up, brother? I think platinum has some massive upside potential. I definitely think platinum is going to explode if you look at its relationship to palladium. And, it doesn't have that much of a track record, but look at its relationship to gold. I think platinum probably has another 100% move up. I think platinum eventually will come back in line to like even money with gold. It's also like, limited supply. They use it for a lot of important things. Catalytic converters, palladium and platinum, are essentially like swappable in everything but like diesel, catalytic converters. So, at some point in time, I think platinum and palladium will probably be valued the same again. So I don't think palladium is just going to like massively sell off. So I think platinum will probably have a nice burst to the upside. It's also undervalued compared to gold, the same way silver is undervalued like historically to gold. So I think platinum, I think uranium, pot stocks. Pot stocks topped out back in 2018. They were selling off the whole time. Like the market continued up, and then they still got crushed during like the March sell-off. And then now I think it's time for them to have like long trending trades to the upside. You could argue that they're not commodities, but they really are. Even like whether you argue for or against recreational or for or against medical or for or against, THC or cannabinoids or whatever, you could say like hemp paper is going to be the future or hemp clothing is going to be the future. That whole sector has massive potential now that it's becoming like less, I guess, like taboo, because essentially like, it was, like villainized for decades because of like the whole paper industry. Like, you essentially had like, it's crazy if you look into the past history of pot stocks. They were like, oh, this thing is great. It's the future of like paper. And then you have basically the guy who owns all the printing presses who makes all the paper say, oh man, I don't want to have to pay all this money and get like new equipment and grow new products. Instead of trees, I got to grow all this hemp, and the whole thing like switches over to paper. So I'll just like villainize like pot, not even like marijuana, but hemp. So I'll just villainize it, make it sound bad. So they basically ran like a negative marketing campaign against like pot, and use like racial like motivated like things in there against like blacks and Hispanics, saying that it was bad and like all this. I mean, you can look into it yourself. I'm going to get too much into it because I don't like getting into all that junk, because everybody's like cancel everybody over every time they mention anything. But essentially there was like a big marketing campaign against hemp, against marijuana, because the main dude who owned all the printing presses and had the ability to reach everybody spread a bunch of FUD, and it lasted for like 30 years, 40 years, and just tricked everybody. But in all reality, is pot any worse than alcohol? No, not really. I mean, it's different, but probably overall should be regulated the same way. Is hemp overall better than paper? Yeah, you can grow it in a smaller space. You can grow way more of it. It comes back way faster, and it's like functionally like better and stronger and more renewable as like, paper. You can make clothing out of it. Like it's an amazing commodity. So, you could say, not to mention like obviously THC, like natural healing principles, pain relievers. Like, I mean, think about it like this, again, whether you're into it like legally or medically or whatever, THC versus, oh yeah, for sure. THC versus like, obviously THC is still illegal in a lot of places, but CBD is not. So you still have like legally differences between them. But look at CBD and the benefits that it has proven now, and they're doing all these tests as like a pain reliever and like all this other like potential like positives that are coming out now. And then look at what is legal, what it could replace. Like ridiculous like pharmaceutical drugs that people have become like addicted to, like, and turn to, you got people that are like addicted to painkillers and stuff like that, like Vicodin, and then they end up on heroin. And what did they really need? Not Vicodin. They probably would have been all right with CBD. So the real thing is like the difference between like capitalism and like what's better for the people. So capitalism is all about the money and making profits. Well, at the time, it was more profitable to like sell to people essentially like heroin through a pharmaceutical drug company than it was to just like let people use CBD. Because in all reality, why? Well, because anybody could just grow a couple pot plants if it was legal and like get the purposes, whether they're like smoking it or eating it or whatever, or buy legitimate CBD like from a lab if it was like legal and serve the same purpose. But you can't like grow your own heroin. Like you're going to grow like poppy and then like go through I mean, you could, I guess, process it and do all that, but I don't know. In the end, I think it's all about money. It's all about profits. Johnson & Johnson was like responsible for like, I think like 80 or 90% of like the, drug crisis, essentially like processing it like overseas and sending it here. So, you have to look at like the actual motivations of stuff. And as like the times are changing and everything, I think it's going to be a huge industry. I think it's going to be a huge industry. I think there's a huge, huge potential. Think about it like this. It's not even legalized. It's decriminalized in most places in the United States, but it's not actually legalized yet. So there's no American companies for THC or CBD that are on the American Stock Exchange. So the only companies that are allowed to be publicly traded on the United States Stock Exchange are all like Canadian companies and like foreign companies. The same way that there's no Bitcoin ETF that's American right now because we haven't approved one in the United States. We only have the Canadian ETF for Bitcoin right now. So at some point in time, that's going to change. So you're going to have at some point in time, potentially, a Bitcoin ETF, American one, that's going to hit the exchanges. And the same way that you're going to have potentially, American CBD or THC, or hemp companies, whatever, paper, hemp, clothing, hemp, whatever it is. Once all that's like regulated, it's going to be a huge booming market. So, times are changing, and in my opinion, getting like commodity bull markets tend to last like 8 to like 15 years because it takes so much longer to get things online. Like tech stuff like can happen overnight. You know, Zoom can blow up overnight because the groundwork's like laid, or some new chip comes out or whatever. But when it comes to like commodities, like you gotta be like, oh, uranium's entering a bull market again, let's start mining uranium. Okay, so you gotta find a uranium deposit, you gotta get like approved for like permits by the government and this, that, and the other. Then you got to build a mine. Then you got to actually mine the uranium. Then you like whole time you're like building nuclear power plants. So you got to build these nuclear power plants, set up all the infrastructure. Then you got to start the nuclear power plant online. Again, you got all these regulations, all this other. So these things take forever. I mean, the cycles are just exponentially longer. So, you know, if we're at, which what I think is essentially the beginning of a commodity bull cycle, like, you know, looking at like, you know, we looked at a couple of the pot stocks earlier, you know, obviously like copper, silver, gold, like a lot of these things entered a bull market basically in the last like 1 or 2 years. The upside potential on these things is massive because we might have another like 6 to like 15 years. So, you know, these are like more like long-term investments in most cases than like just quick little like scalps or trades or whatever. So I think the potential for, and I mean copper and silver, I'm like massively bullish on too, because industrial uses. Copper is used for everything because it's a great conductor. You know, they use it for all the electrical lines and everything. They use it for like pipes. You know, it's used for so many important things. So if we're going to be basically setting up the world in the future for new energy, which eventually we're going to be doing because we've made so many technological advancements in energy that we're going to need to lay the groundwork, and the groundwork is copper. So copper is going to explode. And then on top of that, you have silver, which is used in like electric vehicles. It's used in solar panels. You know, it's used in like all these things. And the price is so low historically in comparison to gold. And most silver mines, silver is like the byproduct. It's like something that's left over from them mining copper or from them mining gold or from them mining something else. So most of silver mines, you can't even just be like, oh, things are going great, let's just mine a ton more silver, like let's up production. It's like, no, you just get whatever's left from mining gold. So yeah, if gold goes up, it's going to be more beneficial to mine more gold, obviously, or copper or whatever. But the idea is, you know, if you're getting like 80% of your mine is getting gold, and, you know, there's obviously a bunch of other things involved too, but let's say 80% is gold and 20% is silver. All of a sudden, silver is going up parabolically, so let's mine twice as much silver. Well, you also have to mine twice as much gold. So you don't have the ability to up your production and your profits in the same way as if you have like a purely silver mine where you could just say this thing's going parabolic, you know, let's just mine a ton more silver. So, you know, fundamentally, silver has huge advantages. And there's other stuff, you know, there's a bunch of like the precious metals and you know, commodity like metals and stuff like for industrial like production. I'm basically bullish on all of them. I mean, aluminum, steel, you need steel to like build everything. So steel looks good. You know, I mean, lithium, all of it looks good to me, honestly. Nickel, they need this for like all tech stuff. So I think it's going to all be like massively bullish. So, you know, in the same way that like crypto is like parabolic right now, I think that we're going to see commodities be parabolic next time. And even if you don't like metals, I mean, what about coffee? What about sugar? What about soybeans? Like, we need all this stuff. Wheat, cattle, you know, pigs. Like, I mean, we need all that stuff. And they're only making more people. Like, so we're just going to keep needing more and more of them. And again, like, you know, we've been at this like bear cycle forever. You know, I think oil too, like there's only really like two big commodities that are not, or I guess, well, depending on how you look at it, but three main things that have massive potential in the future. You know, you could say, oh, oil's going away, whatever. Sure, oil will go away eventually. But before we can get rid of oil, we need to use a ton of oil to make all the stuff that's going to get rid of oil. So I'm still massively bullish on oil. You know, we still need it. Most cars are gas cars. Most industrial equipment uses diesel. You know, the proportion of like electric vehicles and solar energy and wind energy and, you know, nuclear power is still like minuscule in comparison to like the total oil and coal consumption. So Oil still massively bullish and not at all-time highs. Uranium, in the future, very soon, going to be massively bullish and not at all-time highs. Silver, going to be used, massively bullish, not at all-time highs. So I think those are three of the best, like, long-term, like, trending investments, in my opinion, because they all have strong fundamentals. They all have strong, some more than others, charts, but they're not at all-time highs. And there's very little downside risk to something like that, because what's the downside risk? They invent a machine that can make uranium or silver out of dirt. Probably not going to happen. An asteroid, they start mining gold and silver off of asteroids. Probably not going to happen anytime soon. They start mining it from the bottom of the ocean. Probably not going to happen anytime soon. They find something that works better than it. Probably not going to happen anytime soon. So all those things are like fundamentally like awesome for investments long term, even if the technicals don't look great yet. That's the type of things I would rather look for. If I'm going to look for something that doesn't have a great chart, I want it to have great fundamentals. So I think those are three commodities that have massive upside potential long term that don't look amazing necessarily at the time. And silver's chart is actually like very strong right now, considering, it's not at all-time highs. You could argue whatever you want about uranium and oil. What else? Anybody else got any questions? Other assets to look at? Tether printing press has been working overtime, printing 220 million every day for the past 30 days, amounting to 6.7 billion. Your view? I mean, you could say all kind of stuff you want about Tether. Here's the thing about Tether. I think Tether definitely was up to no good. It's been proven, that Tether's up to no good. But, they basically were able to stall regulation long enough that they fixed the problem. They printed a bunch of Tether they didn't have the money for, and then they used it to pump up the price of Bitcoin. And then once the price of Bitcoin is extremely high, they just sell off some of the Bitcoin, or they just have the Bitcoin that's worth way more money. And then now they say, oh, look, now our Tether is completely backed by Bitcoin. Well, there you go. Problem solved. So, you can argue whatever you want about Tether, but, they basically already took care of like any trouble they would have ever potentially been in between the fines they already paid and now being like, hey, go ahead and audit us, because now we have Bitcoin has gone up so much in value that they now have enough value to completely back the Tether. And then you could also argue that Tether is just a printing press for crypto. So unless they start showing the actual inflows of cash and then the outflows of Tether to match it, there's no way to say that they're doing anything wrong, because they're pumping massive amounts of cash into the system. And if they don't have to prove that people aren't just giving that cash to them and they're printing an equivalent amount of Tether and then using that Tether to buy the crypto with, they're not technically doing anything wrong. I mean, as far as regulation and stuff's concerned. So, in my opinion, is there funny business going on with Tether? Yeah, there has been for years. But are they ever going to get in trouble for it? Or did they already, take care of business? Yeah, I pretty much think they did. I mean, I pretty much think that anything they did wrong before, crypto price has gone up enough that they don't have to worry about it. Because if somebody gave, okay, look, if say you get a printer at your house and you start printing $20 bills illegally, and then you take a bunch of those $20 bills and then you go out and buy gold with it, and then you get rid of the printer, and then you get rid of the illegal $20 bills, now you've got the gold and none of the evidence. So that's essentially what Tether did. They basically said, okay, we got a bunch of cash, and then we used the cash to back Tether by printing Tether, and then we used the Tether to buy crypto with. Well, now the evidence is all gone, because now they don't have any paperwork they have to show that they got the cash to make the Tether with, because now they can just say, well, you can check our bank account and we have enough Bitcoin, we have enough cash to essentially back all of the Tether that we printed. So legally, aside from them showing the paper trail, there is no paper trail. So they basically, if they ever did anything wrong, It's going to be very hard to prove it now. They had their chance to go after them, and never were able to make anything stick or slacked off, or, in all reality, like, the government takes forever to regulate stuff. They don't know what the hell's going on. So, yeah, I mean, I think they were up to no good. They were definitely up to no good. It's even come out before when they, like, changed the website and everything, and they were like, oh, Tether's back 1-to-1 by dollars. And then it's like, Tether's back 1-to-1 by dollars or other liabilities or assets. They obviously changed it for a reason. They changed it to stop themselves from getting in trouble, because whatever they put there originally was not true, so they could have gotten in trouble. So they went ahead and changed it. So then it's like, wait a minute, you said it was backed 100% by cash, and now it says cash or other liabilities. And they're like, well, yeah, so we're not lying now because we changed it. So they would have had to, like, got charged before they changed it and then proven that they were doing something wrong. Now it's been changed. So unless they, like, go back in time and go after them for, like, old stuff, I don't think they'll ever get in trouble. So what else? Anybody else got any other questions or anything? I think that's probably pretty much it for me. We got to talk about, the cult mentality and, thinking about broad markets more. CLH. I'm getting like a bunch of CLHs. Are you talking about Clean Harbors Inc.? Yeah, there's like a bunch of CLHs, so you got to tell me which one. Uh, and then what was the other one? AG? Oh yeah, I can't. Just let me know about that one and I'll take a look. I'm just not sure which one you're talking about because there's a bunch of them. Clean Harbors Inc. Yep, no problem. And I mean, I always keep a chart on First Majestic, so I never mind looking at that. But I mean, in all reality right now, like, I'm overall like bullish on mining stocks, but they've just had a nice move already. So I think in all reality, they're probably, depending on what silver and gold do, if they bottom here and then continue, we'll definitely get like more upside potential. But, if they start selling off again, I think we'll see a further pullback. All right, so I mean, this is like what we're talking about with Caterpillar. You got a chart that goes back, way back to 1980s, and you're at all-time highs right now. Now, what I would pay attention to with this one is, though, is in all reality this monthly close. What happens with this monthly close? Because if we close above 86.16, it looks real good, because it's an all-time monthly high. But if it sells off and closes below that, you could be looking at a real bad looking like double top. And again, same thing if you go to the weekly. We haven't actually gotten. Oh wait, I think you did. I think you got this weekly close higher. Got to be real careful here, but definitely has like potential for a massive upside. Blue sky breakout continuation. This one actually reminds me of, what is it, Dow Jones? Yeah, I mean, I don't know what this, man. God, well, it looks worse than it is, really. Yeah, it really just looks worse than it is, because that was 66%. I mean, tons of stuff did more than that. So, Overall, it's really not bad. I mean, what I would pay attention to on this is you're right at that key level because you're basically at the all-time high, like slightly above it. Um, you know, is it possible that this still fails and we go down from here and this was just like basically a throw over? You move up a little more and then it sells off. It's very, very possible for sure. But I would expect at some point in time, this thing to end up at like $115, like 1.236, 1.5 at 152, or the 1.618 at 173. I would expect it to eventually get up to there. The question is, though, is it going to top out right here? Because you could look at this essentially as, the way this looks to me, just glancing at it, is it basically looks like we came in, put in the 1, 2, and then we're putting in the 3. And then the real question is, where's the rest of it going to come in at? So if we look at roughly just for comparison, we look at the retracement of the previous cycles. We came down to the 382 on the last sell-off. So if this Fibonacci extension from the top of the 1 down to the 2 comes in, I would expect it. We're at the 1.618 basically right now. So that's a very likely place that we would top out. Let me make it a little cleaner. So we're basically right at the 1.618, slightly above it. So this looks like a key area that we could top out in. And then I would expect it to come back down to the 382. Is it possible this just breaks right here and goes to the 236? For sure. It could definitely get up here to like 114. And then you have to pay attention to, from there, where is the actual retracement going to happen? Because if we go from the 0 to the 1, let me just get rid of a couple of these so it's a little clearer. So now if we go from here and then let's say we just top out right here and it's basically a double top and it falls down, I would expect it to come back down to the 382, which is basically $72. But before that happens, we could easily push up here and then the 382 would be like down here at $83, which would essentially be, I would expect we break out above this, come back down, retest this resistance that flips support, maybe get a little stab down here. But, I would expect essentially, even if you waited for this thing to run up and then sell back off, your retracement would basically be where we're at right now. Because it would be $84 versus $90. As opposed to if we just topped out right now and then we retrace back down to the 382, assuming this was the top right here, the 382 would be back down here at $73. So either way, you're basically looking for somewhere in this range for a retracement. But it looks like it has more upside potential. But the real question is, are we going to get the continuation slightly above this or sell off? Or are we going to get a nice push up here? Because where that tops out from, let's say right around somewhere in the middle, if we top out around there, we can then look at the Fibonacci extension, like theoretically, from where this is at, down to the 382, and we get a rough idea. Again, this is like rough idea, but you could expect essentially that 5 to come up somewhere around 121, or if we got up as high as like the 2.618, 158. So it's definitely got some potential. But again, when you're this close to a previous all-time high like that, I would rather just wait. I would at least wait, just me personally, just to be better safe than sorry. I would wait and see what happens with this monthly, because we're so close. I mean, you're like 2 weeks away from like having massive confirmation. If you're already in a position, I would trail a stop. Like me personally, I would trail a stop. Not financial advice, but you're looking for this monthly to close higher, because you basically came down, filled the gap on this monthly, and then you're starting to get continuation. So what, worst case scenario, it moves up a little further and then you can buy into momentum. Best case scenario, it tops out right here and you can get a better entry somewhere down in here at like a 382 retracement or roughly the top of the 1, and then I would expect continuation. But absolute worst case scenario, yeah, double tops and sells back off massively. But I mean, overall, it's a strong chart. Strong chart. I mean, it's just a matter of, do you want to play it safe or do you want to just jump in, or are you already in a nice position is really what it comes down to. And then First Majestic. All right, so, you know, and again, this is one we always look at. So nothing has really changed on this. It's showing a little bit of strength lately, but it's basically just doing what gold and silver are doing. It's still below the 8 and the 21, and they're crossed to the downside on the daily. But in my opinion, this was our 1 at the top right here at 14, and then that was our 2 down here at $9, and then our 3 was that massive squeeze up here to $24, and then I would expect our 4 to come in. Let me go to longer time frame on this thing, because it's a giant pennant taking place. You know, from our monthly close right here, or weekly, depending on what chart you're looking at. Monthly close right here, we have 1, 2, 3, 4 touches on the top, and then a confirmed breakout, and then we have 1, 2, 3, 4 touches on the bottom before our confirmed breakout. Once we broke out, we basically broke out, got a really bearish move afterwards, and almost came back down to retest. So I would be looking for essentially that to have been the bottom, that 0.5 where we already sold back off to. And you'll notice we really didn't get a close on the monthly yet below the previous top right here. So I would be looking for essentially this to be the bottom, $16 to have been the bottom, or if we make it to the 0.5, that would be $14.84 to be the bottom, or best entry position $13.29. But you know, essentially if we break out here, come back down, retest this purple trend line and that previous swing right there as support, that is, like, to me, that's one of the best places you could ever find, you know, a position at. Because now we have the 200 exponential and simple trending to the upside. We're above them. We already got the attempted stab down below them. We're putting in a series of, you know, higher lows. We have a confirmed breakout of a pattern, you know, and then this is our measured move of that massive pattern in place right here. And the measured move would take us up to $36.48. And that's not even to, it's not even to the 1.236 of the previous all-time high to low down there. So, you know, we could realistically be looking at $47, or if we make it all the way up to the 1.618, $118. So, you know, you're looking at like a 10x. But again, that's going to come into line with like a massive silver bull market, which, you know, fundamentally, there's a ton of stuff pointing us in that direction. I mean, if you've never seen like my silver cup and handle video, you know, we got targets from like silver busting out of a cup and handle that's 40 years old to like $90, all the way up to like $550. And then if you look at like historic gold silver ratios, I mean, fundamentals, all that junk. But like just looking at technicals, I mean, massive potential. And First Majestic, I think, is one of the stronger. They have a strong presence in the space. They also have a strong chart. Overall, you know, they're still below all-time highs. But, you know, we topped out at 886. We have a technical confirmed breakout of a massive pattern right here. So, you know, even if you want to wait and get super bullish at like $26, you know, once we break out of the all-time high right here at $26, I mean, sky's the limit. And it's probably going to, you know, this is probably going to happen before silver hits $50. Like, just my guess. Because this thing's at $16 right now. Silver's at like 27, 26, something like that. So, you know, realistically, if silver hits $50, this thing is going to moon, because the moves in the miners are typically like exponential. So I would expect that this $36 high is probably when silver breaks out of its pattern and hits like $50. Maybe sooner, but I think this thing has massive potential. I'm super bullish overall on First Majestic, and a couple other miners as well, but this is one of my most bullish ones. Oh yeah, for sure, no problem, brother. Anything else? If anybody's got any other questions, assets, topics, I'm down to talk about anything before we get out of here. But I'll probably wrap it up here sometime in the near future. All right, I'm going to grab a drink real quick, give everybody a chance to respond. All right, great. Well, I appreciate everybody tuning in today. Appreciate all the positive feedback and everything. Great community. Great time to be in markets. I'm super excited to see what happens this week in markets. To tell you the truth, though, what I'm kind of expecting is with this massive stimulus now announced in Europe, and then obviously the massive Biden plan going out, and all you guys, or not you guys, but like United States citizens or whatever, about to be getting, I think everybody's getting, like, everybody that's eligible is getting $1,400 per person and dependent. So like a family of four is getting $5,600 in stimulus checks. Everybody that was unemployed is getting $10,000 of that unemployment tax free, which means they typically take out taxes on their unemployment when they get it. So even if they took out like 20% taxes on that, most of those people on the first $10,000 they got, they're going to be getting back another $2,000. So that's coming back with these people's taxes. And then on top of that, you have child tax credits of $3,000 to $3,600 per kid. So you have everybody with two kids getting $6,000 to $7,200, depending on the age of the children. If they have 5 kids, there's no limit. And the crazy thing about that is it's not even just a tax credit where you can like write that off as taxes and then just not pay taxes. They're literally going to just give you that money. So if you paid no taxes and you have, let's say, 10 kids, they're just going to give you $30,000 spaced out monthly over the next year. So let's say you have 2 kids under the age of, I think it's 6. They're going to just give you $600 per month. I mean, if this isn't universal basic income, I don't know what is. And again, I don't care. I really don't care. I don't mean to sound salty for people getting money from the government. I would much rather that my taxes go to actual people that need it than go to like wars in other countries over oil, or like weird gender studies in Pakistan, or like crap like that. Abortions in Mexico. I would rather actual U.S. citizens that are poor or need help get the money. I would rather it go to schools to teach people how to be self-sufficient, or retrain people that have lost their jobs in various sectors, or anything. I would rather it go to like housing homeless people. I would rather it going to actually helping people than to like politicians and lobbyist agendas and pointless wars and that junk. So I'm never mad about the percentage of money that goes to helping people. I'm mad about the percentage of money that does not help people. So again, is it fair to the people that made whatever the cutoff point is? My only problem is, and this is the destruction of the middle class at its finest. The people that are already like rich and involved in the stock market, or that are middle class and involved in the stock market, did great this year and outperformed, or crypto or whatever, outperformed the inflation. Like, and when I say inflation, I mean inflation of the monetary supply. So they're fine. The people that are, I don't want to say like poor, but at the poverty level, below the poverty level, or, got money for unemployment, lost their jobs, and ended up getting like $600 a week pandemic unemployment on top of the $300 of actual unemployment. Times that out, $900 a week for a year. And a lot of those people made like $40,000 to $50,000 roughly, not to mention like the stimulus checks and the other benefits and stuff. So those people did good. But the people in the middle, or like the bottom of the top of the bottom, I guess you could say, got screwed. Because what if you stayed working at Walmart or a grocery store or a gas station or whatever, so you didn't get any unemployment, you didn't get any pandemic unemployment, and you weren't involved in like the stock market or crypto, like you don't have enough money to be investing in stuff. So you didn't get to take advantage of any of the massive gains in like, and you don't own your own house, you don't own property, you don't own any of like the massively inflated like bubble that took place. And then you also didn't get the government aid that took place because you didn't lose your job. So those people really got screwed. So there's a lot of people in like that middle range that really got screwed through the pandemic. Because what would you rather do? Would you rather get paid $900 a week to stay home and not risk getting the flu? Or would you rather go to work every day and make $500 a week going to work, or $600 a week going to work, or even $900 a week going to work? If someone told you you could make $900 a week going to your job that you already work, or you can make $900 a week spending time with your family, or starting your own business, or reading books, or whatever, and stay home, which one would you rather do? I mean, after a while, yeah, maybe you get bored and you'd rather go to like a job every day for like fulfillment, or you have too much pride so you don't want government handouts or whatever. But I mean, in all reality, who wouldn't rather just get paid to do something else? Like, because you could literally get that money and then spend your time somewhere else. And the most valuable asset you have is time. So why not get paid and have your time over spending your time to get paid? And again, I'm not saying like people should just be lazy, but you know, anybody that's smart, if you tell your kids, hey, get up off the couch, load the dishwasher, and I'll give you a $20 allowance, or you can just sit there and watch TV and not unload the dishwasher, and I'll give you a $20 allowance. I mean, any kid could figure out they would rather not unload the dishwasher and get $20. So that's what you basically did. And I'm not saying they shouldn't have done it, you know, lockdowns, whatever. You can argue all that junk as much as you want. I don't even care. That's all irrelevant. But the fact of the matter is, if you incentivize people to not do anything, you can't get mad at them for taking the incentive to not do anything. Especially if you give them more money. If you tell your one kid, hey, I'll give you $20, go unload the dishwasher. You tell your other kid, hey, I'll give you $40 to sit there and not unload the dishwasher. The kid who got $20 and worked for it got screwed. And the kid who got $40 and didn't have to work for it benefited. You know, and then if you have another kid and you say, you know, well, you're invested in stock market, so you don't get anything because you were smart with your money and invested it. So now you don't even get an allowance because Bitcoin's going parabolic or Tesla's going parabolic. Even those people might be salty because they're like, oh, I made responsible decisions and then I didn't get anything. So, you know, it's a weird situation because it's like almost universal basic income, but it's not universal basic income. So it's almost like, why don't you just give everybody universal basic income? Because right at the beginning of the whole pandemic, they were like, oh, everybody's affected. I don't care who you are. Like, you either lose your job or you lost your child care or you're in danger if you go out in public. So everybody's affected by this thing. They're just basically saying like, it's going to be like a popularity bingo contest where we pick who gets benefits based on who we think deserves them or who lobbies hardest for them. So we're going to like bail out this business, but not worry about small businesses. Walmart can stay open, but mom and pop shops can't. So, I mean, in a lot of ways, like the agenda is just so effed up on this whole situation. Like a lot of people really did get screwed through all this. And, you know, in the end, I'm glad that they helped people. I'm glad that they like actually stepped up and gave people money that need it. But in all reality, I think most people that probably are like, I think most people in the end got screwed by the whole pandemic and everything. I think most people got screwed through all this and are going to end up worse off than they were before. Because if you were eligible for most of this stuff, if you didn't make like 70,000 or 100,000, depending what cutoff or whatever, or if you didn't get unemployment, you just kept working your job, if you didn't get a massive raise or start making more money, if you weren't involved in the stock market or crypto, you know, you like lost net purchasing power probably. So temporarily, yeah, you're probably better off, but long term you're probably worse off because now everything is more expensive. If you like were saving up for a house and going to work every day and now houses are 40% more expensive, you're further from being able to get your house than you were before. So in all reality, it's like a weird dynamic where if you weren't involved in the right places or you weren't so poor that the government was like, oh, we got your back, you really probably got screwed. So very strange situation. I know it's different in like every country. And again, I'm glad that the government stepped up and actually helped people. Like the first like bailout they did for like the businesses and the airlines and all that, I thought was total crap. They totally like screwed the people. So I think it's better that they are giving more to people. And I'd always rather see more tax dollars go to people. But in the end, it's like these aren't even tax dollars anymore. It's like taxing like kids that haven't even been born yet. And like on top of that, I think honestly, like not to hate on young people, but most young people are already like horribly lazy. Like, so I think this is probably just going to like debilitate their laziness even more, because they're going to be like used to all these handouts and everything. And like what was already like not the most productive generation is probably going to be even worse now. So I don't know what our future is going to look like. We'll have to see how that all pans out, but I don't know. We might have just like got the world addicted to like monetary stimulus, and they'll never be able to get off the fix. So, well, that's probably it. I'm going to wrap it up there. I think I went on a long enough tirade rant right there. So in the end, I think we got at least another week of parabolic moves, maybe a couple more weeks, because even if everything's going to crash sometime in the near future, which I don't necessarily think it's going to, but even if you're going to argue that it is, it would make way more sense to wait and get all these fresh stimulus checks and tax refunds and all this extra money involved in the system and get that extra little squeeze out of it to the upside before this big downside move. So I don't see any reason why we're just going to all of a sudden like crash to the bottom and that's it. You could argue that sometime in the future, or the bubble's getting ready to pop or whatever. But like I always say, you got plenty of time to realize it. Like the bubble's not just going to pop. I mean, especially with the stock market, you could argue like crypto is just going to sell off 50% and you'll be screwed. But the stock market literally has like plunge protection team. So if everything just starts massively selling off, like it can only sell off like so much and then trading gets halted. So it's not just going to be like you wake up in the morning and, you know, the market opens and it's down 75%. So the danger is much more. And even with like crypto, with futures and everything, like if Bitcoin dropped like 75%, you would assume once again the arbitrage would like step in and pump the spot price back up, you know, because people would just arbitrage the difference. So essentially like the plunge protection team now in the stock market is going to protect crypto from any extended moves. So if we did start seeing like a violent, crazy sell-off or whatever, you would still have time to get out, because you just don't have to like get your stop loss hit, and then you can just get back out when it bounces back up, assuming that like we're entering into a downtrend. So, you know, in a lot of ways, like I think the downside is much more protected than people think. So, and fundamentally, there's no reason to just dump all of a sudden before all this fresh money like hits the market. So if there is going to be a collapse, if we are going to see a bear market, whatever, I think we still got time, honestly. It's hard to argue that we don't. So, well, there you have it, guys. Appreciate everybody tuning in today. Definitely always willing to look at whatever assets you guys want. So leave them in the comments, or I will see you on the next stream. I'm probably going to do, again, either Wednesday or Thursday this week, and then every Sunday. And then I'll probably start putting out like the intermittent videos in between again, too. Just been like real busy with everything. So, well, there you have it. Crypto Trend Trader. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And I'm out of here.